housing. People are saying that housing's coming back, and maybe you're out there, maybe you're looking for a mortgage and you're thinking adjustable rate. Maybe you shouldn't think adjustable rate. There's one guy for whom the adjustable rate is good. Most people it's not, though. Jack Hough will tell you who that is. And I gotta tell you, unfortunately, folks, it's probably not you. Right?
Yeah.
Right, Jack Hough?
If you're thinking about an adjustable rate mortgage, you ask yourself this question: am I Mark Zuckerberg? And if the answer to that question is no, then you probably want to prefer a fixed rate mortgage. I'm talking, of course, about Mark Zuckerberg got this adjustable rate mortgage with a rate that starts at 1.05%. And people are thinking, how do I get such a great rate? The answer is you don't. That's a niche product. You have to sort of privately negotiate it.
Well, but before we even get into that, why is Mark Zuckerberg even taking out a mortgage?
Well,
The guy doesn't pay cash for a house?
I don't really know. I don't suspect. We're talking about a $6 million mortgage for a man who is worth $16 billion.
Billions.
So this
Just
is
pay
not
cash.
the most important financial transaction he'll make this year.
Right.
But if
Still
you're,
got an amazingly low adjustable rate.
if you're able to borrow at around 1%, the latest inflation rate is 1.7% over the past year. You can make an argument that you're actually making money on that loan because the money that you owe is losing value faster than you're accumulating interest payments. So, it's basically even better than free money for him.
Okay, so why does he get that deal and you and I won't?
Well, he's like a treasury bond. He carries no credit risk, right? And the bank that made this loan to him, they're selling short-term CDs right now that pay 0.05%. So even though a 1% mortgage might look like they're losing money on the deal, they're not. They're paying much less to people who are buying those short-term CDs. The average rate nationwide for someone who wants to take, if you want to go for the lowest rate possible, right? His loan resets monthly, but yours probably reset each year. And you're going to pay around 2.7% right now.
Sounds very low.
It sounds low.
That sounds very low.
It's not below the inflation rate, so it's not free money like Zuckerberg's getting. But here's the key. The deal with adjustable rate mortgages is always that you get a lower rate than a fixed rate mortgage. But as rates have gone lower generally, the spread between the two has compressed. The typical deal in the past, the difference between a 1-year adjustable and a 30 rate mortgage, you've been saving 1.7 percentage
pulled
points.
That one up there for you. You can see how tight those things have gotten.
Yeah. So over the past 20 years, you've saved an average of 1.7 percentage points on that adjustable rate loan. Now you're saving less than 0.9%. So the amount of cash that you're saving is really not commensurate with the risk you're taking. Most people are better off. I mean, the 30-year rate is so low right now. I think around 3.6 at the last reading.
But we know the Fed has said that they're never going to raise rates again ever in history, right? No, 2014. But we know they're going to keep rates low for a very long time. So why wouldn't you maybe just roll the dice?
Roll the dice, but roll it with your stock portfolio or your bond portfolio rather than your house. If you're someone who is considering some fancy maneuvering here with your house in order to make some extra cash on the side, you don't have enough money to consider. You should consider an adjustable rate mortgage if you can walk into a bank with a massive amount of cash and negotiate a below market rate on your loan. You can say, look, I've got enough cash to pay this loan off like that. I don't really need it. And if you don't really need the money, that's when you get the best deal on a loan.
Unfortunately, right? Yeah, that's great. That's why I don't get the best deals. All right, Jack Hough. Jack Hough always gives us the best deals. Thank you very much for coming on, sir.